The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome, everybody, to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host, once more into the breach to go, dear friends, as we start the show off always at this time when the markets are actually trading.
The following takes place between 2 p.m. and 3 p.m.
And what do we have going on today? Well, we're off 7 points in the S&P. Cash volume is very, very light, just 1.87 billion shares as we start the show. So down anywhere from 300 million to 700 million shares. So I'm going to call this a light volume pullback out here. Options continue to show somewhere around 2270, 2280. When I looked at lunch, it looked to me like they think that the market's going to close out somewhere around 2280 or higher tomorrow. So maybe this is a deal where if everything comes off smoothly at lunch tomorrow, which I think is when the new president gets sworn in, maybe everybody's going to kind of breathe a sigh of relief that we haven't been hit by an asteroid yet that day. And things will move back. But, are we pulling back a little bit? We certainly are. Is there any volume? The answer is no. So if you are bearish out here, you really have to hope that maybe that volume comes in later in the day, because right now it is fairly light. And I guess it's, as always, I like to start off the show with a little bit of history.
Then it's all just a little bit of history repeating.
On this day in 1999, President Clinton proposes in his State of the Union address investing a small portion of the Social Security Trust Fund in the private sector, just as any private or state government pension would do. This would earn a higher return and keep Social Security around for 55 years. Well, of course, the party there says, okay. The party out of party says, no way. 4 years later, the exact same proposal comes out by, of course, yet another party's president. And everybody claimed, well, not everybody, but a lot of people claim that it was irresponsible. It was irresponsible in 99. It's irresponsible in 2004. It's irresponsible today. Just don't let the politicians anywhere close to your cash. As somebody in the den says regularly, it's so cold. You know when it's really cold because the politician has his hands in his own pockets. Anyway, what can you say? Tomorrow we're going to have a new president. And, of course, almost like a bad sports team rivalry, everybody will change sides, opinions, and try not to be as obvious as it normally is, that the hypocrisy runs like a river through the middle of Washington, D.C. But on this day in 1999, we get to see it in black and white. My theme today is going to be never short a dull market. You can make a little money. We're down 10 points or 11 points on the S&P cash right now. But, not a lot of volume, 1.9 billion shares. We'll see how the end of the day comes out. We've always had kind of these late day pullbacks, but after kind of a sell-off. But don't expect that we see a great deal. There's a reason why a lot of these chestnuts roll around in the market, and that is, for the most part, they're fairly true. You don't want to be short a market that's fairly range-bound. You want to kind of wait until it busts out of it. But indeed, shrinking volume and tight daily trading ranges, 80 to 85% of the time, break out to the upside. The tie goes to the bulls, not the bears. And most of the time, it's just the market is preparing yet another attempt to rally. I suspect that why you might make some money if you're trading 10 or 15-minute charts. If you're thinking that you're going to do any swing trading and make any significant money off of the indexes, I say au contraire. But you know what? There's a reason why people say it, and most of the time it's true. Never short a quiet or a dull market, and this is as quiet and dull as it gets. And just a thought out here. Facebook, we talked a little bit about this, but I continue to think that social media has problems. Today we saw that the Canada's IRS version is going through people's Facebook pages to see whether or not they're cheating on their taxes. Now, why some of this stuff is actually public, apparently they're getting the access to the non-public stuff and stuff that you deleted from Facebook too. So again, I don't know how wise it is to be splaying one's personal stuff all over it. To me, I've always thought that it was a little bit of narcissism for things like Facebook. I could understand LinkedIn because it's business to business. You're pressing the flesh. Facebook just seemed to be kind of pure narcissism at its worst. We'll see. And probably at its best, a great way for governments to come after you by what you say on Facebook. But I still think social media itself has kind of hit the high water mark out here, and the downsides of and the dark sides of social media will be here for years to come. Today, of course, before the bell, we had Alaska Air BB&T, JB Hunt, and Western Alliance. After the bell tonight, we've got American Express, Maxim Integrated Products, and United Continental Holdings. Before the bell tomorrow, General Electric, Kansas City Southern, Schlumberger, and SunTrust Banks. Really get into the meat of the subject of earnings, of course, next Tuesday. That probably doesn't leave a lot of time for options rollover to occur. Of course, the monthly options are over tomorrow. What does that set up? It does set up options rollover, which is Monday and Tuesday generally. But my guess is they're going to have to pack it in there. There is enhanced, how can I say that? Enhanced volatility, both up and down normally, generated by option market makers needing to get in and out of positions, retire ones for hedges of options past, and put new ones on for options in the future that they're writing. And so you tend to see a lot more up and down, back and forth motion, not maybe a total average range, but more minute by minute action caused by those options rollovers. So they'll try to get as much done as they can, I suspect, on Monday. So do not be surprised to see a little bit more wide movements on Monday, probably ending up yet in another day where the market kind of goes sideways. 1.9 billion shares as we go through the beginning of the show. And as we said before, today's kind of going to be down on light volume. I'm looking for kind of a bounce tomorrow, probably late in the day. At least that's what options look like they're setting up to do. We'll be back after this very timely short timeout.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And I got a lot of emails, so you can always email me at path@tfnn.com. I'm glad to answer your question. You can also call me at 877-927-6648. Get a lot of questions about what Trump really means to the stock markets. And the question is, can anybody really be rational enough to discuss this without instantly launching into some kind of trade based on their bias, either pro or against? I think I know what it means. I hope everybody is ready to listen. And for the most part, if you look at the plans and you read and you don't listen to extremely biased cable news networks that are hysterical and for the most part outright liars, you will find out what Trump plans actually are. It looks like from the leaks and that look genuine so far, that a President Trump is going to go down the road of a think tank, and the idea is that he's going to promote, of course, continue to promote jobs growth, but it looks like the biggest changes are probably going to be internal to the government. The plan right now shows some $10 trillion cut off over the next by the next 10 years by eliminating government offices, agencies, and redundant agencies. Some of the easy, low-hanging fruit are outreaches for a for a religion by NASA. No one really understands why NASA should have millions of dollars funneled to it to make an outreach for somebody based on religion, but it has. Without a lot of reflection, government has gotten very large, at least if you look in the eyes of Mr. Trump, and ungainly, lots of duplication, lots of make work, and it looks, other than maybe getting rid of a lot of regulation, it certainly looks like a lot of agencies are on the chopping block. Anything probably to do with the arts, anything to do with public television, They were incredibly brutal to him, not fair at all during the election. I can't imagine that PBS misses the chopping block in the coming years as they sign up one. But again, does that really affect the stock market all that much? And the answer is, for the most part, I'd probably short real estate values around Northern Virginia, because it sounds to me like there's going to be a lot of headcount reduction in the government, in these redundant services, and also in what was kind of a political feather bedding, at least to him. So I will leave you to whether that is right or wrong, if he does it. But my guess is that he is and will get a great deal of those things through. Now, the other side of it is just deregulation and, of course, removing a huge amount of onerous regulation over the last 8 to even 12 years, even before the current president. And that's probably what set the most and most bullish tone in the market. Does this mean that we're going to the moon? The answer is no. Does this mean we're going to hell? No. But for the most part, look for energy sector businesses probably to do a little bit better. Anybody that has had massive levels of regulation on them probably also can reduce cost by some of this regulation going away. But again, one man, whether it was Barack Obama or Donald Trump, does not run the government. It is a lot of check and balances. And like I said, I don't know if it really makes that much difference unless you have a home in Northern Virginia. And because I think property values, if there's going to be one big thing that come out of this, property values are going to continue to probably go lower there as he gets rid of a huge amount of overhead in the government that is ripe for cost cutting. Anyway, you can give me a call at 877-927-6648. You can email me at path@tfnn.com. And, of course, you can post messages in the den. We'll go to charts here fairly early. Not a great deal going on out here. Few stocks making some signals as we're watching the S&P kind of bounce around this 2260 level today. Somebody gave me or called me. They called me. They emailed me about covering some puts, 280 SPY puts. And I said, today I'm probably looking for the low of the day to come in around 330. Then look for probably a rally into the end of the day, as we've seen before. So I thought that, if you were probably going to get out and get long for Friday's close, that you probably were looking around 330 today or maybe 1030 tomorrow morning, somewhere around in there. And I think probably it may be an equal S&P low at both of those points. And then probably a rally into the close tomorrow to finish up options. Anyway, we were looking at a handful of stocks, not a great deal of them out here giving a huge amount of signals in the marketplace. Aree Pharmaceuticals, I don't know if I'm pronouncing that right. Been watching this one thing kind of bounce against these highs. When these things do hang out these highs, it's always the first thing to do to start checking out the earnings date. This one, of course, is February 27th, so probably a little far away to think that this thing holds up for yet an entire month. But, you had a nice 1.81 million share day. That's at $41.72. Tried to test it with 455,000 shares in November 18th. Failed, came right back into the trading range. You've had about 4 days of light volume over here onto the right-hand side of this. And I don't see, you need to check in a little bit more, especially in pharmaceutical stocks, whether they have anything pending in news. But not good to see these things holding up on such light volume on a handful of these. Amrsys, AMRS, is one that's come back and tested. This is a little penny stock, but kind of interesting to me in that you had 7 million shares on November 4th. It's 67 cents. Came in through there, tested it with just 2.14 million shares yesterday. Light volume day in today. Some of these, I'm kind of looking for the end of the market to come with some penny stocks running. And that's why I continue to kind of look at these penny stocks. Maybe not so much as a play, although I would be more than willing to play them with the right setup. But to see how these things are setting up, if they're getting ready to make some big runs, a la Dries did 2 or 3 or 4 weeks ago, that's probably another good sign that the market is come to an end. I just haven't seen enough of those to really make me think so. We do have retail still giving some bad signs. Essentia Retail Group, symbol is ASNA, had a 3 million share low on October 21st at $4.68. Didn't quite pierce it yet today, but certainly more volume already at 473. But it's already got 4.4 million shares today. So a good 1.5 million shares, maybe 2 million shares more in this retail group stock. Energy was sufficient on the way down.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And Steve asks, where's Steve from? South Carolina. Asks if Acadia Communications is acting just a little bit better. And yeah, it is. Is it back into the trading range? It certainly is. What you dislike, though, is this high volume low. And now You want to see that tested before you get back in, $56.31. So you need one more rip out here to test 56.31. Again, on light volume, you take a look at it. This company makes a lot of optical products for networking. Athena, there's no big movement in that one. Aether Systems, another penny stock out here. I've been waiting to see how some of these do. Volume 400,000 compared to 700,000 at $1.41. Not enough for me. Veo Pharmaceuticals, nothing in that one. Avid, did we talk about this one yesterday? Came back, it touched its gap. I don't think there's a whole lot in that one. BHP Pilton, we talked about that yesterday, just hanging around at the highs. B Cove, Bright Cove, testing its low out here with much lighter volume. This one may be very interesting. BCOVE. This is what you want to see bottom. I can't say that this is going to hold, but certainly it closed back above $7.71 would be a great test of this November 22nd low that had 417,000 shares, 900,000 shares now. So, to be a confirmation of a bottom out here that you would like, you want to see less than 417,000 shares. You certainly have that, but you need a close back into that range at 771, and that would give you room to run probably up to about $10. Brinker's Eat. We were watching this one the last couple of days. Kind of good looking. I'm not a big fan of retail or the food business right now. Energy was a little bit more than I liked on the way down. But guess what? This thing is, if you're talking about testing a gap up and a sign of strength, this thing gapped up on the 11th of August last year on 6.9 million shares. Tested it with 1.6 million shares. Today out here, just 1 million shares. Keep a very close eye on this one. This may be some of the kind of stuff that you're looking for. Was thinking that maybe Six Flags would roll here on light volume. It had been testing its $60.65 high from April 27th with that had 2.7 million shares with just 1 million shares on January 10th. Kind of coming back down, but really not picking up any juice. No big signal out here either. So what else do we have? Stryker Corporation. This one we were watching for the chance of a false breakout, but guess what? It actually had high volume at the highs of January 11th of 3.14 million shares. So 3.14159. How far could I go with pi? Probably a good pi joke in here. You still want that January 11th high tested out here in Stryker. Stryker, hardly newer. Anyway, VIAB, Viacom. Kind of interesting that a lot of these traditional broadcast media companies look like they're going to go for sale. AT&T kind of disgusted with the actions of many of the executives at CNN are getting rid of and putting CNN on the block. A lot of people want to get out of the that business if it's not doing too well. CNN hadn't been doing very well for a while. I think they don't think they can control a lot of people over there. They kind of do what they want. AT&T getting out. Others, I think, are probably going to do the same. A good supply of cable media and other media outlets probably means lower prices, not higher prices. And it looks like more and more are setting themselves and putting themselves up for sale. Viacom kind of breaking this uptrend line today, but what you don't have is a lot of volume. VMW, which is VMware, this thing is going to be one of the better companies. I suspect in 5 or 10 years, it's going to be a household name. I still need it to come back down here and test $65, which we've never been lucky enough for it to do for me to buy it. And I think there's probably going to be an opportunity someday for me to get it there and make it a long-term hold. I love the business. I love the executives. And no, I don't need any smart comments. If I love them, why don't I marry them? I know how many people you like to email me with those kind of things. You don't need to. I've already jumped the gun on it. Anyway, nice big gap out here at 65, so that would be it. Yeah, I saw that. Somebody commenting in the den. CNN's getting a little wacky out here. What else do we have? WMGI. This one's another one out here that looked like it had a nice high. I just didn't like a market out here to roll on this. I just think we've got one more day of market gas out here probably before we go higher. We may even see a little tiny bit lower tomorrow at 10:30. I think maybe the rest of the day is a rally day for the market, mostly based on what options are showing. But some of these stocks have given very light highs. There's just not enough of them to move this market one way or the other. August 23rd, we saw over 5 million shares at 25.50 on the Wright Medical Group. WMGI is the symbol. Pierced it, and when we're talking Wyckoff terms, piercing it means to go above it, go below, and close back in that range, never exceeding the volume. Wyckoff kind of preached, and a lot of people preached, and I think before the days of high-frequency traders, you could have said that 10 or 20% was a significant lighter volume. But with high-frequency trading and the rest, I like half the volume, if not even less. This one was a nice setup. If you wanted to short it, this one was it. I have a couple of rules that would negate that. One, I don't like to short stocks under $30. And secondly, I wanted to see a whole lot less energy from this $20.50 low on November 2nd up to the 25.72 January 11th high than we got. It's about the same energy on the way up and down. If I pick a stock that I want it to pop, normally I want to see the energy really fall off on the way up, and it was a little lighter. But I really want to see it fall off, and we didn't get that. We got kind of basically three nice candles into a high. It's kind of pulled back a little bit. Maybe you get one more shot up there at 25.72, and if that's really light, maybe that would make your case better on that. We've got a lot of other stocks to look at. Again, give me a call at 877-927-6645. And what else did I want to look? We'll look at the decliners out here today. Advaxis, how can you even say this? Advaxis, is that what it is? ADXS. Not a lot in the chart here, but one of the stocks down so far on lighter volume today. We've got a long list. We'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
I had a question about the IBB. I thought it was headed to about 300. It got up to 287.17 on this last run. It is now kind of getting back into an asymmetrical triangle. That is for those folks in Lutz, Florida. Lower highs and higher lows, and you just continue to kind of auger into that. You could put a big greater than symbol on it, and eventually it just keeps doing that till it gets pretty close to the apex of that greater than symbol. And what do you get on that one? Normally you get a breakout somewhere between the 3/4 into the apex to all the way in the apex. Almost never does it get to the apex. Sometimes they get close. But normally you'll have a breakout, and most of the time it is a head fake. And the first move out there is generally a big spike, and you want to try to fade the move on that one. So if I was bearish on the IBB right now, I would want this thing to break out, go up to 300, tag it, do it on lighter volume, and then come back down. To me, one, I'd feel a lot better than the trade. The risk reward would be 10 times better than anything here. If you're going long, you also have to kind of wait for this thing to really start breaking up to the upside. If it doesn't have much volume, then you have to get out fairly quick. So right now, not a lot of anything. In fact, a lot more in the scans and the charts I went through last night. A lot more of these stocks that are kind of just homing in to this price. In this case, this is 275. When I looked at options, it looked like 280 on the options for tomorrow's close. So again, I'm kind of looking for a slight bias to the upside into Friday's expiration. And of course, you can call me at 877-927-6648. I was told I said 66 something else. It's 6648. But you've heard it enough, haven't you? You know it. AKS. AK Steel down a little bit. After a big run, this thing's coming back. If you love great chart patterns, you want this thing to get back down to somewhere around $7.50 on light volume. That may take a while. Dean's Food, nice gap down, volume picking up over the last few days. This thing is about, you want it probably about 1775, 1750. It may not get there. You may have actually found the bottom around this $19 level if this thing can hang out in the 19s and the volume just goes sideways for a while. You had kind of a legitimate breakout. This thing's back into the trading range now, though. So it's got to prove itself by holding that $19 level for a while. Diplomat Pharmacy This thing's trying to beat out a low somewhere around the 1250 range, down. Not very much much volume today, so that's another positive if you're watching for that one to base out for a possible buy. EP Energy back to its gap at $5.50. Volume is light. That signs of strength as you go back up. Hopefully, you get to $5.50 as a level of support. If not, you might get back down to $4.30. But risk reward's probably fairly decent out here at the $5.40 level if you get that in the next day or two on the continuing incredibly light volume. GNC Holdings, as we talked about this one, the changes in rules for advertising for non-drugs is incredibly tough. GNC also has its stores in a lot of malls, and the traffic is down. Very hard to say that there's anything going for the GNC in the near future. I haven't looked at the books hard enough to see that this company's going out of business, but the chart would suggest this thing is eviscerated in just the last year. And most of it may be on that on the issues around advertising, where you no longer can use celebrity advertising, and you have to use double-blind studies to back up any claims you make. And of course, most of the claims on a lot of this stuff don't hold water, and that is the problem. How do you advertise a company like GNC? It's tough now. You may disagree with it, but it's the law. GOV, which is government properties income. As I said, maybe the thing that's probably going to be the biggest one if the agenda going forward for the Trump administration is a lot of cost cutting in business. They're talking about $10 trillion in cuts in the government over the next 10 years. If he were to get 8 years, he thinks he can get most or a lot of those. That may be just a starting position for negotiation, but maybe he gets half that, $5 trillion out of cutting out a lot of waste, redundancy, and turning a lot of these companies over. Saw kind of a big spike today in Fannie Mae and Freddie Mac with one of his cabinet members being grilled, saying that maybe it's time to get rid of Freddie and Freddie Mac because, of course, government officials want to meddle in loans far too much. Couldn't agree more. Government shouldn't be in the loan business or pushing the loan business or having a government-sponsored entity in the loan business. And, of course, can't be too big to fail either. The answer is more, probably not less competition. HIMAX, this one has just continued to go down every day. We've talked about it. Kerry Biopharmaceuticals, KERX is a symbol on this one. You might find some support at 550. We're still a little over that. Volume, though, kind of iffy on this, but that 550 range looks like some levels of support. Melco Crown Entertainment, which is MPEL. Man, this thing certainly looks like some kind of ABC on the way down. Certainly looks like a retest of the 1489 of what day was that? December 20th. So we'll continue to look at that. But you had a nice sign of strength. But, man, did you come down on some wicked volume. You had your first bounce. The only chance is if this comes back down to that $15 level on very light volume to have some. Rent-A-Center, which is if you're thinking the stock market is going to hell, the economy's rolling up, everything's going down, you probably would like to see Rent-A-Center headed up. And it's not. It's just doing the opposite, which is telling you probably things are getting a little bit better in the job market. Job security, people not going into this high interest environment for buying their washers and dryers and TVs. I'm wondering if part of this isn't the economy, part of it just a lot of these things are becoming incredibly cheap, like $200 televisions. If you want to get a 60-inch screen, yeah, you can pay $2,000. But really, even the poorest among us seem to be able to offer and buy an HD TV for $225 at the Christmas special at Walmart, don't they? anyway, coming down, volume is not quite big enough. You got another 6 cents down to the low, so you might find some temporary lows out here. But right now, if you're looking this as a proxy to the economy, you got to kind of look at this as kind of decent. We're coming back down. Maybe the $8 level holds. We've seen some other companies like this in that kind of sector not doing well either. So who knows? Maybe things are starting to turn up just a little bit in the jobs market. Kind of hard to believe the jobs numbers from the government, whoever runs them. But I kind of trust those.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And, of course, being Thursday, we've got Tom O'Brien for the next 2 hours. Andy Heck in the 5 o'clock hour Eastern time. Talked to Andy on Tuesday, and he said he was thinking about doing a show on Bre-X tonight, or at least maybe some long discussions about it. Haven't talked to him since. Maybe he's going to talk more about it tonight on his show, but I always love the inside baseball stuff, especially since he was knee-deep in it during those times. I'd like to hear a lot more. Maybe he'll do it. Oh, next week. Okay. Next week for Bre-X. Okay. We'll hear it. So anyway, I'll look forward to it. I love the story. I read one of the books a handful of years ago and was actually, after I saw that, started looking into it. And apparently the guy that they're all looking for has been seen in Rome about 5 years ago. So who knows? A lot of tricky things going on. Maybe Andy will be able to give us a wider idea. Of course, the movie coming out the 29th. But I'll look forward to next week, Tuesday or Thursday, Andy. Maybe he'll answer in the Tiger's Den out here on what day he's going to do the BRIEX thing. But a lot of these times when the entire world goes nuts, I think probably, as they say, the most teachable moments are things like long-term capital management, the dot-com bubble, when you see people acting fairly nutty, how much profit there is to be made. So we'll talk about it. Hopefully he'll tell me next week sometime. He didn't say Tuesday or Thursday. But let me know, Andy. I'll be glad to promote it. I'm looking forward to all the inside on the BRIEX thing from a guy that was on the inside. Of course, talking inside today, it's all about the railroads, at least for the big movers. We're just off 9 points on the S&P cash now. Volume still is extremely tepid at just 2.2 billion shares on the day. We're going to have a very light day out here. Canadian Railroad, a lot of talk about mergers and acquisitions and CEOs leaving and coming and going, which makes everybody think that these things are going to merge. I got to sneeze. Hang on a second. I think I'm done sneezing. Anyway, Canadian Railroad Company, this one kind of sold off a little bit on it. Most of the other ones doing a little bit better. Canadian Pacific, CP, nice move up here with volume. CSX, this one's kind of the true winner out here, as most of the rumors and discussions about CEOs coming and going and mergers coming are all over CSX. I think someone called on Tuesday and asked about this, and I've said that I was actually long this sector. Hopefully they got out of that short before this thing went the other way. GWR, Genesee and Wyoming, GWR, nice little gap up here to this gap down. Now, this one actually would have given you everything that you wanted. If I was long this, I'd be out now. KSU, earnings in the morning. This thing kind of spiked on the news. This has been kind of the whipping boy. A lot of shorts in this. If the news is pretty good, I think $90 is on the table for that one tomorrow. If the news is bad, probably not that much downside with all the news swirling the train business. NSC, Norfolk, nice pop up to 115.99 today, mostly holding all of that. And rounding out the train business, choo-choos, UNP, nice pop out here. Of course, all of this on speculation of more and more mergers and acquisitions in the train space. Choo, choo, choo. So when you can, not when you have to. We'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.